The investor at the center of the pandemic meme stock craze says he still believes GameStop's management team can turn the struggling video game retailer around. But remarks made on Friday from the man known on social media platforms as Roaring Kitty didn't keep shares in the company from plunging almost 40%. The latest evidence about the unpredictability of meme stocks. Keith Gill's live stream on YouTube drew more than 600,000 views following the release of GameStop's quarterly results. Those showed the company's managed to narrow its losses in the first quarter, though its revenue fell as sales weakened for hardware and accessories, software, and collectibles. Joining us now to discuss the meme stock craze is Brendan Caldwell, director at Caldwell Securities Ltd. Brendan, thank you for joining us.
Thank you, Theresa.
Now, what is a meme stock and how do they differ from traditional stocks?
Well, they do and they don't. I mean, stocks have traded on emotions for decades, hundreds of years, in fact, based on people's hopes and dreams and expectations, perhaps even more than their fundamentals, the price-earnings ratios and price to sales and cash flow projections and tedious mathematics like that. People have believed, they way back to the South Seas bubble, which was a pretend company that was modeled after the British East India Company that never really amounted to anything except, well, perhaps the OG stock bubble. So too, you flash forward to the present, you get emotions around stocks. Now, these particular ones, these meme stocks, had their heyday, I guess, and this, what we're going through right now, is kind of a meme 2.0, if you will. But going back, and I should have the date off the top of my head, but a year or two, the idea was that the retail investor, if I may be so bold, younger people, your generation, would stick it to the man by driving up stocks that had no business doing well. Companies like a movie company like AMC, a video game retailer like GameStop, BlackBerry, which I still have and use, but I am the only one. I'm like a museum artifact when I pull that out. But these companies should never have done well, and they were heavily shorted by the institutions, by the hedge funds, by those believing that they were doomed to go out of business. And starting with Keith Gill and Roaring Kitty and others, these so-called Reddit or meme stocks shot through the moon and forced the institutions that were short the stock to actually start buying back their shares to cover their margin calls, and that caused the stocks to go even higher. So the whole prophecy became self-fulfilling, and stocks that should never have been in business at all ended up being the darlings of the stock exchange. And we've seen a little bit of that in the spring of 2024.
And what are the potential risks for investors who buy into meme stocks?
Well, like with anything, it doesn't last. Where I think investors do the best is where they're investing in companies they know more about than other people, that they like the product. I mean, if you bought GameStop because you actually go to the GameStop store and you like it and you see activities picked up there, great reason to buy GameStop. And if you happen to make a lot of money because all of a sudden it became the stock du jour, the stock that Roaring Kitty and the other people on Reddit are talking about, and you make a lot of money, if only by accident, great. But if you're buying into it because it's gone from 20 to 60 and you're hoping it goes to 120, this isn't 2022 anymore. This is not the COVID epidemic where people are at home in their basements. The man has very much retaken control of the market. So yeah, GameStop went from 20 odd to, I think it got up in the after hours on Thursday at $68, $69, so it more than tripled. But now it's back down to more or less where it was before all this began. And if you bought up at $40, $50, $60, well, that's a pretty significant downside for most retail investors.
And why do meme stocks often experience extreme volatility?
Because there's nothing there. Well, let me rephrase. There was nothing there to begin with. What they've actually done, these meme stocks, is use the opportunity for their inflated share price to to refinance themselves. So AMC raised billions of dollars. I should have the number off the top of my head, but vast sums of money. GameStop, the same. They've been able to issue new stock at these inflated prices. And then if you have billions of dollars in your war chest, you can figure out what you want to be in the future. So yeah, you might be losing X tens of millions of dollars, but if you had the cash to do that for the next 20 years, presumably you'd be able to figure that out. So it makes a big difference to the survivability of these companies and the ability for the Keith Gills of the world to do it all over again based on a good earnings announcement or on the hopes of a good earnings announcement.
Brendan, thank you so much.
Thank you, Theresa.